The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 20th day of June. My pleasure to be here Monday through Friday, noon until 1 p.m. And fascinating market as always. I think that's what keeps us so intrigued. There's always a challenge, always something to look at that needs to be analyzed and kind of put on your plate, chew on. Look at this. We've got the E-mini, makes a high, 27.96, round number high on the 13th at a peak, D in the Chapman wave. Really tumbles 60 points down to 27.35, 75 yesterday. Gaps up today, from the low that is, and then pulls back. And that 9-period moving average at about 20, exactly where we are, 27.74, has been strong resistance. We've got what's called Chapman wave falling axe formation, basically. That is a declining, expanding cone, meaning lower highs and much lower lows. And at certain points, it either turns around, makes a cup or a V-shaped pattern, tries to worm its way back. And you always have to look at the left side peaks as resistance. There are no peaks. The last peak was the peak right there at 27.96 on the 13th. So what we're looking at within the context of the market is that arch formation in the weekly chart at leg C, it's only a peak C if there's no new high above 27.96, is still there. The MACD is good, not great, it's just good. Stochastic's now improved to 81%. It wasn't yesterday at this time, but it now at 81%. That's good. And the 120-minute chart has made a V-shaped pattern and is attempting to break above the highs that were made, kind of parallel highs of the 27.76.25 once, twice, three times. So that's going to be the challenge, to try to get above there today, to go to a leg D to try to tackle 27.80 in that V-shaped pattern. All right, now let's go to the nitty-gritties. So the parameters to look for on the E-mini is that if there is a break above 27.81, that's really a breakout, and that's very positive. It'll probably be in leg D, but it's still very good action. If there's a failure later today, and you start to see the 27.69 to 67 key support taken out, not good action at all. I'm treating this as a counter trend rally, as a bounce. We'll see. Let's go on. Now we're going to go to the Dow. INTU. The Dow at this point, is very interesting. I had a Chapman wave trend gauge flash yesterday, which suggested that there should be a 9 to 11 point rally in the E-mini futures within 2 days, and that should help the cash S&P and Dow S&P to rally. Well, lo and behold, we got all of that. There was a rally. The Dow gapped up a little bit this morning. It actually ran to the 24,000, I'd say 24,790s to 24,820s to subscribers this morning will be a resistance. So it gaps up and it runs to 24,804. And then suddenly there's this big slide. Now it's trying to come back. It's down 12. Very horrible action, actually. Now, I'm going to do this because this is not Chapman Wave Friday, where we do technical analysis. I just wanted to show that there's a chance here that there's one more low below 24,567 for a Chapman Wave 5 and a leg D to the downside. I'm not sure yet whether it's going to happen because this day has to play out. If that happens, how the rally, any rally after that, is able to garner enough strength to get into the 24,850s to the 24,900 level that is absolutely key in this particular phase that I'm looking for. So I had a couple of questions, one over the night into this morning. One was, are you kidding? the Dow's been in a correction since January the 26th. Surely this a number of months means that there will be no highs in 2018, or at least they're going to be much lower lows. Good question, or good statement. Then there was another one that said, wait a minute, there's someone else. One of your hosts is extremely bullish and says that it's a buying opportunity. What are you missing? First of all, I haven't missed anything yet that I can see. We were long almost all the way through May in the Dow and the semiconductor index. We had other longs as well, but then we started the shorts last week, switched to the short position right at that PD in the daily chart. Where did it go? Daily chart, right? Yeah, right there. We were long, we switched right there. I mean, you couldn't get it closer than that, right? And we've been short all the way down. We remain short. I don't see that just yet. And talking about this is a single leg A to the downside. There's a chance that we make just a nominal rally here and then go down into leg B, and then it's all over in terms of the downside, and then you start a pretty big move to the upside. A whole bunch of conditions have to be met to do that. I just don't think in this particular time where there's a lot of, now we can perceive it as not just noise, but there really is some kind of a trade war going on. It hasn't really picked up other than words, but it will be a de facto situation soon. But remember, I said this maybe 8 months ago, 6 months ago. I said, remember, this is a person that you have as a president who all his life has negotiated by making an outrageous claim to what he wants and then compromising. Bill Clinton was the perfect president for compromise. Because look at, I heard this live from someone who was there on the scene, where he was looking at a Democrat and Republican, and he looked at the Democrat in the eye, and he told them everything they wanted to hear, and they were nodding away. Then he turns around, the Democrat's still there, looks at the Republican and tells that Republican everything he wanted to hear. He's nodding away, and they were diametrically opposed, and yet they are nodding. So we're looking at negotiations. Just it's not a very nice way of doing things, but it's a way of doing things. All right. So this is a salvo. That's all it is. So we'll see how that works out. Meantime, let's go back to our nitty gritties here. And what we're looking at is the Dow has now the key support, at least intraday, is 24,650. We go under that today. The low today so far is 24,628. But if we go back under 24,650, that's going to be very depressing for any of the bulls. And if it starts to break above the high of today, 24,804, my thinking was that we should get to the 20s, 24,820s, maybe even the 50s after the tremendous sell-off. So this is a lot of news. I'm just going to do this for a split second. Look, Boeing. I contend Boeing is done for now. So Boeing is up $2.39 at 343. This is not a great chart pattern on the daily. The weekly chart has the U-shaped pattern that takes out halfway into the body of that cup formation. You just need to close under 337, and this thing's going to go down to the lows. That's the way I'm looking at it. I'll be right back. Basil Chapman, Tiger Conditions Hour. Dow's down 10, S&P's up 8. Bifurcated market.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. So let's go on now. We're going to look at the IWM. IWM is at a new high. The 120-minute chart is in leg D. Let's just get out of that. I had it up for the other reason, for the E-mini. The monthly chart, now we're a little more than halfway through the month, and the monthly chart is looking really good. It's breaking out in the very long-term Chapman Wave. This is called the Chapman Wave Inside Track Resistance Zone. It's way above it. That's that green line. Leg B, I'm calling this leg B in the weekly chart. I don't see any other reason at this point, even if there's a pretty good pullback to where we were just a few weeks ago, back from 169.86 down to the 163, 161 area. That could be a consolidation. And that's the reason why I'm not hugely bearish on the market right now. I'm also not usually bullish on the market because this is a bifurcated market. We've got to let these guys finish their moves to the upside. IWM, all-time high gaps up in leg E. I thought it was a Friday. It's not. It's a Wednesday. So it's over that. Remember that track that I was looking at, like a railroad track, making a turn? Well, now it's over the top. Now what's very important is the inside, the middle part of this candle right here, sort of kind of a Chapman Wave mini Roman candle. And if there's a pullback in the next 3 days below 168.07, hey, let's just call it 168. By this time next week, if we're trading under 168 in the IWM, the Russell 2000 ETF, there's a good chance that we've made some kind of a short-term top. And that weekly chart has a long way to go to see the stochastic go from 96. Hey, the daily's at 98.60. It's 1.40% away from 100%. Never gets to 100%. So it's in what is termed oversold, overbought conditions, but it can stay there for quite a while. Even if it comes back to 95%, they're still in a really good territory. Nothing to do here. I said to subscribers, now it's on my short watch, but not unless certain conditions are met. And I've given the price of exactly what we're looking at. But nothing yet. Still looks really good. Okay, so that's IWM. But wait a minute, the QQQ, and I had a question about the wave count. So leg E in the weekly chart, a leg C in the weekly. That was the monthly chart, leg E, and it's going to a resistance line. That resistance line is way up at It depends when, but at 181.70, it's trading 177.57 right now. This is going to be interesting. You see this little pattern here? In my work, I love these narrow channels. It's in this. This is actually, I suppose you could call it a falling. Let's call it a falling X, because it's real simple. When it breaks above and holds above the declining upper line, that's the trend line from the top, lower highs and much lower lows. So the lower highs on the upside, that it says that the whole area of 176.20 to 176 is really the cushion that the QQQ NDX 100 has to hold. If there is a push above 177.89, it starts a leg G. But wait a minute, let me open this up, because I need, in the Chapman wave, you need to do a lot of analysis when it gets to all-time highs and you're in an alternate wave count. You don't want to be confused. You want to say, okay, what's good? What's good is the price is holding well above the 9-period moving average of 176.07. What's not so good? Well, look, the MACD is starting to flatten out. It looks very much like it, before I put this in. This is about a week or so ago. I said a rectangle formation in the MACD. Can it deflect back up the green line? And absolutely it did. So this is going to be very important, because the stochastic is at 86%, way off the high that it was making when it went to that 175.93. The stochastic then was at 96%. Now it's at 86%, and the price is going to all-time highs, or close to all-time highs. That's a divergence, but it's only a divergence if there's a move back down below the 176 level of the 9-period moving average. Then 175.15. Let me get that right. Yeah, 175, around about the 175.20 to 175 level becomes the next key support level. Very important moment here. Why? Because I had a question about the NDX 100. That is the root. And the NDX 100 trading right now at hello, there it is, trading right now, and a G/C. Remember, sometimes you can get slightly altered wave counts between the root and the ETF that functions as its trading partner. So what I'm looking at here is that we've gone to a G/C in the NDX 100. And that says, and I discussed it yesterday in much greater detail. I also did it for subscribers. This says there's a real good chance that you should make a D if the pullback is just minor and the MACD is still holding quite nicely. And in this case, the stochastic at 99% is holding nicely. See, there's a difference between the cash, NDX 100, this is the root, and the trading vehicle, which is the QQQ series. Ha! What did we get today? We got a push to a leg D and a sneeze. Excuse me. Got to figure out how to. I haven't got a button for that. All professionals should have a button for the sneeze. You never hear anyone sneeze on the radio or on TV because they've got a button. I used to have a button, but not on this particular microphone. Okay. So we went to 72.98.49 today. 849. Last high was 131. So this is leg D. Two things. This is exactly where you want to be a little bit cautious. This is where a yellow light flashes. Nothing else, just a yellow light. You're driving along Route 93. And there's a turnoff coming and you aren't quite sure, is this the one you have to turn? So you just slow down a little bit, getting ready to maybe turn off. What's my weekly count in the NDX 100? Trading right now at 7296.44, up 68. My weekly count is a leg C, and I have no reason yet to even think of changing that. So the IWM and the NDX 100 are not being hacked or worried about the tariffs per se or anything to do with international diplomacy and economics. What they are looking at is higher highs, all-time highs, still in progress. So don't stand in the way just yet of this. But I'm looking at it real closely, and the MACD declined sharply in those 3 down days that we had up until today, and it's rallying. Is it rallying from a level that says, hey, this is a brand new buy mode? I don't think so. So let's leave it at that. What we've got is everything in place that says IYC is the only one missing. I spent a lot of time on that in my webinar. The IYC has just gone to the missing leg D. And that's what I was waiting for. All the little duckies are in order. There's a breakout in the weekly chart. This is a very important moment. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So let's just go through a couple of things and then we'll wrap it up. IYC is the iShares Used Consumer Services ETF. It has Amazon, it has Home Depot, it has really important stocks in it. And it's just gone to a new high in leg D in the daily. I'm calling this a leg C, at least for the moment. Technically, I have every reason to call it. I'm just going to go what I usually do because I must be faithful to my methodology. E/C. E/ what happened to the E? E/C. So my thinking here is that the power of this move is strong enough to think that it is a C, but I'm going to give it that alternate count because it is a cup formation. We know how deadly the cup formation it becomes if it's a drop bucket formation. Let me just, while we've got this, keep your eye on the middle chart. That is the weekly chart of the IYC, the MACD cross positive, the stochastics at 92%. It's running very nicely with price movement. So keep an eye, keep an eye, keep an eye, and look at this particular chart. What do you see? A cup formation, a much deeper cup formation, and look at the struggle to break above the left side highs over here. This is the dollar, and the dollar MACD is excellent. The stochastic is at 86%, and yet it really, I spoke about this before, this is a breakout, but it's a breakout that needs confirmation by pushing much higher than the 95.15 left side lip of the cup. And that says, I really want to see the 96s trade. I want to see one weekly close of 96, and then I'm going to say, great. Now the monthly can continue in leg A up rather than have a weekly digestion, which might even impact the monthly. So far, this is what we're looking at, and the daily's okay. MACD's kind of cross positive, stochastics at 83% good, but the price is really struggling to make a new high. It had a parallel high with yesterday, 95.30 on the 19th, 95.30. Let me go back to the IYC just to see. I wanted to give you some perspective. And what we're really looking at here is that the candle at this particular point in the weekly chart of the IYC is still very strong. So the worst case would be if it holds somewhere around here into Friday, and then a doji candle next week, and then a pullback, sharp pullback into early July. Maybe that's what we're looking at. I don't know. In the meantime, key support is 199.88 right now per $1.25. Key support is 197. Wow, I've been taking over a half an hour to do an overview, but I really want to because we are at crossroads, really important period right now. So now I'm going to go to gold. We'll come back again to the dollar in a moment. Gold trying to rally here. It's off the low, but it's still down 3. Not a good looking chart, leg E in the weekly chart, but to go from 1380 down to 1270s in so many weeks, going back to January, what was that? January the 26th, when the Dow made its high, gold made its high. And look what's happened. It's pulled back, but it has not taken out the December 15th low of 1254. So it's taken a huge amount of time and not that much in price when you think of what it could have done. Look how quickly it went up. Look how long it's taken. It hasn't even broken the low. So far, I consider that to be a positive within the gold sector, and the SI, which is a silver, is pretty much doing the same thing. That monthly chart says, wow, you better move along quickly into the 17s because it looks like you really want to test under 16 as support. And right now, silver's down just a fraction. Peak E, whopping pullback in a Eiffel Tower, Chapman Wave Eiffel Tower, uppercase A, straight up, straight down formation. Not good. And I meant to do this. Yes, I think, no, I didn't. Down arrow. Okay. So now let's go to copper. I think we're getting a wrap up here. Copper, weak today. So copper and wood, WOOD, are kind of, for me, in the same category, although they have nothing to do with one another other than the international economic kind of bellwethers in a sense. So 77.86 down 47 in wood. iShares Global Timber and Forestry ETF. This is another reason why I'm thinking that we are in some kind of a slowdown. It hasn't shown up yet in other than the Dow and a little bit the S&P. But I'm wanting to see how this summer is going to be really a mixed market in many ways. So there we go. I think I've almost done. All I have to do is go to crude oil and the yields. The TLT is down 69 cents at 120.29. Let me just check my notes here. We went long yesterday, but I had a really tight stop. My only thinking was if the general market has to be pulling back sharply for money to come out of equities and go into bonds. That's not the case. The Dow, S&P are very weak. New York Stock Exchange is weak, but the leaders are still the leaders. So I think we got stopped out. I hope we did because I don't want to hang around too long, waste money. We had a real tight stop. TLT, long at 120.97, stop is 120.27, and we've gone to 124. We're out. So 50 cents, not even half a point risk, just to see if it was like a test case. I think we might do that again. Meantime, I just want to show you quickly. Look, the TNX, that's the 10-year yield, is made a peak see. It's pulling back. It's holding quite nicely. Question was yesterday, is this a head and shoulders pattern? No, it's actually more like, oh, I don't want to get into this right now, but I'll just do it real quickly. You see this pattern right here? It's like a diamond formation. And diamond formations, the theory, as I recalled it from way back when people started discussing it, is that the theory is the diamond is the, when you break down from a diamond formation, it is the end. It is like a Hindenburg. It is Kaputznik. And I just say, no, 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 no. Think of it as the oval pattern and that it's in a trading band. You have to break the actual top. You can't just break trend lines. You have to break the top. That's very bullish. If you break the top, that would be at 31.15 on the TNX. And if you take out the low, one of the lows on the left side, in this case, the low 27.17, the low of the week of the 6th, then that says, you know what, you could definitely be going lower. But that whole pattern right there is not like an arch formation. It's like you've taken time to try to resolve something. And this is really a time effort more than anything else. Whoa, I think I've done everything. I'm done with that. Let's just get on with some nitty gritties here. Please chart the comp. Oh my goodness, you guys in the NASDAQ. All right, sure, I don't mind. I'll comp anything you want. In music, comp is where we go, we keep repeating something until everybody's ready. Go. Okay, so the comp is daily in leg F. Did I not do that? No, I didn't. Did I not do that? So the question is, could this be an F/B? And the answer is, yeah, it could. The stochastics are 93%. The MACD is making the M formation. If it fails from here, this is what I call the dolphin formation. If that nose takes out the low, the red line, that's very negative, and it bounces back up, it's deflected higher. Let's just see how this plays out. But the NDX 100 and the comp index at this particular point are real close. Next question is FDX. So I was going to do this yesterday during the show. For some reason, I got not unusual to get detracted or distracted. And what happened was there was a Chapman wave forming, a Chapman wave Roman candle. And what I was going to say is this is a really important Roman candle. Normally we see them at the top. Remember, we saw them at the top in January, in February, in the Dow monthly. If they occur within 2 or 3 bars of an all-time high, then you've got to be careful. If you take out the big low, you're going quite a bit lower. But I want to be sure if it was 1, 2, 3, 4 days, 5 days after the top. So I'll think about that when we get back. But Federal Express down to 1,000.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So let's go. E-mini is this RTUY, which is the Russell, which I've been for a while using it to trade the vehicle rather than the ES. Let's just see the ESU18. Oh, don't type it on the chart. Type it in the little box. There we are. ESU18. That made a leg D, peak D right there. Got it. I just wasn't able to update it while I was busy. Pulls back sharply, and now it's retesting the highs. Yeah, same thing as I said before. So it's now in the 27.76s. Just there's enough buying pressure. There should be, for goodness sake, there should be buying pressure today after the sharp move to the downside. So just keep in mind, we've got to get rid of this buying pressure before you can go down again. And that's the way it is. So Federal Express, I was saying, so Federal Express had a huge dip today. Now it's come back quite a bit. It's only down 2. But it made a peak G in the weekly chart, and that's and the 19th of January at 274.66. That, what was the daily? The daily, whoops, wrong one. The daily was, got to go back, back. Peak E, that's right. Oh, I remember this. It was a doji, a doji high, all-time high, right there. Peak E at 273. What did I say? It was 274.66 on the 18th. Let me just put that in. 274.66. 1. Did I say 16? I'll just put it for now, and then I'll change it. Okay. So it had a huge drop from 274 down to the 229s. I would say 50 points. That's almost a 20% correction. Yeah, and not only that, when you look outside right now, everybody, look outside. Do you see a Federal Express or a UPS or an Amazon truck? The transportation of little packages is just incredible. That is the new economy. I mean, that is in real life what we are doing digitally, right? In other words, you've got thousands and thousands, millions and millions, billions and billions of little packages of dots, little pixels, or a digital movement going on through the internet. And in real life, what we've got is the packages. So I'm looking at this and I'm saying, gee, the IYT should be very much higher. The IYT is up $1.15 at 197.40. It made a peak D at on the 12th of January, around number 201. And now it's pulled back pretty sharply. The 194s, 7 points for this particular index, 7 points is a lot. But not when you put it into the context of peak E. And really, just like the Dow, it's got this pattern that's trying to work its way back up. So I'm watching the transportation index. If the transportation index by today is Wednesday, I would say Friday. I'm going to make it Monday. Monday during my show, someone remind me. to look at Federal Express, if I haven't looked at it before, if Federal Express is closer to 199 than 195, I think that's going to be important. All right. Now, let's go on to the next question, which was, could I look at McDonald's? Let's see if I've got McDonald's updated. I know I had it done, but then just on one day I lost some data. Yep, McDonald's, leg D in the weekly chart, peak D, and is pulling back. I think McDonald's is going to be impacted, at least initially, with this tariff war. So McDonald's Corporation, MCD, down 188 at 163.09. Peak E in the monthly chart, trying to make an H formation, hasn't done it yet. But if it goes into the 150, it's 163. If it goes under 157 in the next week or so, that monthly chart is going to look like this, a lowercase h. Upside, a lot of resistance in the 168 area. Next question is WBA. Well, I look at WBA. So okay, I was going to talk about it tomorrow. I didn't want to waste time today. So WBA is the Walgreen Boots Alliance, or whatever they're called. WA Walgreen. Right. So Walgreen's going into the Dow as GE after 120 years, actually since the late 1800s. This is the brainchild of Edison and JP Morgan and some others when they packaged it together as General Electric. It might have had a different name right at the beginning, but the 1920s was it was always part of the Dow, the original Dow. Then it came off, then it went back on, but it's been part of the Dow for at least 120 years. No more. Another couple of days, oiskadois. General Electric goes goodbye, and they deserve to go goodbye because they did so many things incorrectly. God, that guy was bad. Anyway, so leg D in the Walgreens up 3.37, only a leg B in the weekly. I'm going to keep my eye on this because I'm either going to make a new Dow quartet or I'm skipping that old Dow quartet thing because it served its purpose for me for 30, I don't know how many years. I don't really need it. I mean, there's so many other things that I use. I'll keep it in mind though. And the Dow quartet originally was GE, IBM, Triple M, and UTX. And maybe I'll just add one more to take over from GE. I'm not even sure I should keep IBM because it's really old school and they keep talking about new technology. We're right on the cusp of getting this new technology. Cloud what they so late. I don't know if it's even worth it. IBM, let me just see. Down 30 cents. Yeah, I'm going to have to rethink the whole IBM thing. But Triple M, certainly always on their agenda. It's been acting really badly. Made a peak D in the monthly chart and has been just tanking ever since it hit the 259s. It's down to 198. This is a huge consolidation. UTX, which we still hold long, holding okay. It's up 37 cents at 125. We're in at the 119s for my subscribers. I'm watching to see if there's going to be an H pattern in the weekly chart. So, okay, so that's that. Did that. Yeah, gee, maybe I'll talk about it later in the week. So FDX, I spoke about FDX. XAL, let's see what the XAL is doing here. XAL is trading, up a little bit, up 131. Really struggling from a trough D in the weekly chart. I think the XL might need a little more time. I think it will be strong, but right now I'm just looking at it and saying, okay, I'm just watching you. Next question is, this is a good question. So the SOX index, SOX, have I got that updated? Yeah, it's updated. It has made a peak D in the Chapman wave right there with the SMHs. Let me go to the SMH, which is the trading vehicle, has the same chart, actually exactly the same chart. Made a peak E on the, there it is. Peak E. And this to me is really important. I mean, I'm keeping it as important. It might turn out that I'm just wrong. Why make it important if it's not important? Why? Because up until now, it served the purpose beautifully for us to treat it as a parallel member of the Dow and the S&P as a forerunner. Am I seeing my IMs? No, I'm not. Yes, now I am. Oh, we go Rich in Oregon. Rich, how are you?
Fine, Basil. Thanks for taking my call.
My pleasure. Sorry to keep you waiting. What are you looking at?
Covanta, CBA. Is there something changing in the chart that would make you want to buy this stock?
Okay, so CVA trading at $17.10, up 20 cents. Whoa, this is a really good looking chart. I don't remember looking at that. Have I ever looked at this before? I don't think so.
Well, we gotta get rid of our trash some way.
Yeah, right. Okay, so 14, 20. Oh, okay, great. This is a nice looking chart. I'm going to talk about it. We'll be back with Rich in Oregon, CVA, Covanta Holding Corporation. Up 20 cents. Nice chart. I'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Hi everyone, Basil Chapman, and the Dow's up 16 and the S&P's up nearly 12. This is going to be a very interesting day. There has to be some kind of upside action in the Dow as well as the S&P, and the S&P's done it. Dow should be following, and then we'll see what happens. So we're on with CVA. We're Rich from Oregon brought it up, and it's trading right now up 20 cents. The monthly, I'm pleased that I had a chance to do the whole thing. It's in a big rectangle formation going back to 2016. If this is able to close on a monthly basis above 17.75, which is the high back in March of 2016, this is going to be really a good-looking chart because it's got rid of all the pressure of trading in the rectangle. The cup formation is like we've looked at a number of times today, making Chapman wave left side, right side price time match. It should take out the high of $17.30, the high of December the 22nd. It should do it this week, and it's in leg C in the weekly chart. I like it a lot. It's a pity I can't say to you get a full position, but I am going to say to you right here at the high of 1710, I would start a position thinking that it's a position in leg D, could have a pullback, but the pullback 1663, 1640s should be very strong support. I like it as it stands. My thinking here is that the whole low 16s, the mid to low 16s is very strong support. This looks like it wants to go to test the mid 17s. And then if it does that and holds well, it turns the whole area that was resistance at 17.30. It treats 1730 to 16.90 as intermediate term support. Does that help you? I'm not sure if he's there, but I hope so. So with that said, we're looking at CVA. I like it a lot. That's my recommendation. Look at the chart and you'll see that the daily chart has had 5 green, really nice green candles. So it's ready to pull back a little bit. 1663 is the 9-period moving average. So thank you for bringing it to my attention, Rich, and good luck with it. And yes, to my engineer, I'll be able to do that. Now, one of the things that I'm looking at here for subscribers is how does the IWM, does the QQQ, those two series of sectors, is that ready for a pullback, or they're going to drag the down about that part? Have a great.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.